Welcome to the Bull, the Bear, and the Ugly podcast, your no-nonsense guide to the markets. Subscribe, join the community, and get ready to dive into real talk and real market insights. Let's get started.
Welcome to the Bull, the Bear, and the Ugly. Yesterday in the podcast, in the second segment, which I always review what I expect for the following day, I said, if we get a push up in the morning, and we did, the S&P futures were up about 38. The NASDAQ futures were up probably, I think they were up about 100, about 120, 130. I said I would let them have them. We had sell divergences on the 15-minute time frame, the non-confirmations, and mostly I saw the 60-minute time frames extremely overbought. And I said I'd let them have them. And in no time, boom, S&P futures went from 64.13. We traded down to 63.37 and change today. So we dropped significantly, about almost 80 handles off the lows. And then, of course, what happened? S&P futures rallied about close to 40 from 2 o'clock onward. Really great patterns today. Great patterns in MSTR, the 30-minute time frame reversed to buy, correlating with the 15 and 30. The 15-minute pullback, phenomenal. We saw Apple, great pullbacks on the 15. Apple's up about 3.2%. Meta, Caboose today, Palantir, just unbelievable patterns in Palantir, Avago. Now, this morning, Avago was trading at 309 and then traded right down to 300. So a drop of 9 and then rallied 3 at the end of the day. So we saw some big sell reversals here on the 30-minute time frame on NVIDIA, on Avago, and on Palantir. But Tesla still bullish on the 15 to 30 and the 60-minute time frames. Caught some really great longs off the 15-minute time frame. And of course, you know, AMD bucking the trend here today, up 6%, up over $10, near $10. The Russell week, it did rally back at the end of the day, but the Russell reversed to sell in the 30-minute time frame, correlating with the 15. Russell was down less than 0.2%. The Dow, the weakest here, down 187, down 0.4%. And while the S&P futures and the NASDAQ closed up on the day here. So gold exploded here, up 40. Probably one of the best patterns today was when that 30, I told you it's one of my most powerful strategies. When the 30-minute time frame reverses to buy and it correlates with the 60 and the 15, and you got this beautiful pullback, not once but twice. The second pullback, what a beautiful bull flag. I said to look to buy gold below the 34.52, got down to like 34.51 and change, and then a pencil up, and I'm telling you, a monster move. Gold traded all the way up to 73. So from 51 to 73. The news being that President Trump picked the Fed chairman. I guess the market's like that in the gold market here. You know, today, a lot quieter than yesterday, but the patterns were pretty good here. We saw HIMS negative here on the both time frames, 15, 30, and 60-minute time frame. We saw some weaknesses in SMCI. Yesterday, the stock was down about 12%. But overall, we saw a lot of the stocks that were trading near the highs of the day. AMD was down about 5 off the high. Avago off probably around the Avago was about 9 off the highs, like I said, and the S&P futures dropped nearly 80 off the highs before rallying for 40 off the lows there today. You know, I want to just go right to it, and I'm going to show you some really great patterns here. This is the GLDs here today. And so when the GLDs reverse to buy here on the 30-minute time frame right here, you can see the 30-minute correlating with the 15, and it also correlated with the 60-minute time frame. This is very important here. And then what do you look to do? Well, look at that, 12 o'clock. And if you take the 15-minute time frame right here, I'll just switch this to the 30 and give you the bigger a bigger picture here. You can see this is the beautiful first pullback right here on the 15. Right here, you could have been buying the GLDs and or gold here between 115 and 130. And you can see here 55, boom, gold rallied almost $10. And then look at this beautiful pattern. The second pattern, the 30s was trying to set up, but look at this beautiful bull flag here. And they got the deep oversold condition on the 15. The 30 and 60 still bullish. And then look what the GLDs did. Well, gold, like I told you, ran from 51 up to 73. So a monster move there. MSTR reversed to buy here on the 30-minute, correlating with the 60 and the 15. And what did he look to do? Well, I took the shorts here, looking for the pullback, pulled down all the way down to 90, below 94, never looked back. First pullback on the 15-minute time frame, and you can see here that the GLDs were very, very strong. Now, also, when the GLDs reverse to buy here, this is called a double blue buy right here. When the algorithm reverses to buy, when the MACDs are above the pivot, you could take the short and then look at the drop, boom, about $4.50, $5, and then you buy every pullback on the 5-minute, 1, 2, and then 3. So this is what's called a double blue buy. What you could do, again, because the MACDs are negative above the pivot, the algorithm reverses the buy, you could take the short, look for the pullback, boom, $3.50, $4 here, okay? Or you could just wait to go long on the oversold condition. 1 oversold, 2 oversold, 3 oversold patterns, MSTR 99. So there was, some really nice trades here in MSTR. 1, here's 2 here, because that, and you can see the moves here. Each move was about anywhere between, $3 to $4, $5. So a really great day there in MSTR. I want to show you Apple here. Apple's still very strong on the 15 and the 30 and the 60. This is the gap up today on Apple. You can see here Apple on the gap up. And then this is the beautiful pullback on Apple on the 15, right around 130. All the 15-minute time frames seem to be setting up now between 1 and 130. It used to be between 12:30 and 1:30, but now I'm noticing more 115, 130 pullbacks in here. And you can see when Apple pulled in here, 219.40 at 130, 218.70, never looked back. Now, when Apple was pushing up here, and I'll just put this up here really quickly. When Apple was pushing up here, you had 3 negative divergences in a positive trend. Listen carefully. You had 3 negative sell divergences in a positive trend. For one, you have the overbought condition here, okay, on the 30-minute time frame right here. You're making new highs. The MACDs didn't confirm on the 30. 2, you got the push up here on the 3 o'clock pattern. I tried to short this at 90. The high was 85. Okay, again, pushing up on the 15. The MACDs are non-confirming. Now look at the 5-minute time frame here. You can see the 5-minute time frame. The MACDs did not confirm on the high. So basically, when Apple made the new high at 220.85, at first I tried to short at 80. Then I went to 90. High was 85. Never looked back. I saw the MACDs on the 15 and the 30 and the 5-minute time frame saying, no, right? And Apple got absolutely kabooshed, dropped from 20.85 all the way down. I believe it dropped down to the right here, 2019, 1930. So Apple dropped about $1.50 here. What else? Palantir. Okay, so I'm going to show you the spiders here today. So the spiders, this is really critical pattern here. So the spiders reversed to sell on the 30-minute time frame, and it correlated with the 15-minute time frame. So the 60-minute time frame still in buy mode, but now the 15s reversed to sell. So right when the 15s reversed to sell, I said there was an 85% chance that the highs are in for the day. When the 30-minute time frame reversed to sell, right here, okay, you see the 30-minute reversing to sell. Then what do you look to do? You look to short the first bounce on the 5-minute time frame, and that happened exactly at 2:12 right here. Look at this beautiful bull flag. This is a bear flag. Sorry, this is the first bounce on the 5-minute time frame in the spiders or the S&P futures when the 30-minute time frame reversed to sell. You short that. The S&Ps were trading, I believe, 64 on that. I'll go back in time and look at 1230 and look at this drop. Boom, 332.60. You can see the drop of almost 25 points on the S&P. And then here was another great short on the 5-minute time frame. And then they pushed up off the 15, and that's what we were waiting for. If you look at the S&P futures, I believe that the price was at the time 64 here on this pattern. 69. And I was looking at it, but today I saved a dog's life. I rescued a dog from Texas. So for me, I was really focused. And I said, look at this bear flag. And I'm on the phone with the shelter before they put the dog down. A beautiful, beautiful dog. His name's Hendrix, and he's going to be my mascot in here. And a friend to my other dog, Coda. And hopefully I'll have him in the next couple of weeks. But with that, you see the push up here. All right, the push up here. This is a bear flag. So this is the first bounce on the 5-minute after the spiders reverse to sell. And then you can see the SDS is reversed to buy on the 30-minute right here. So this pullback right here, this oversold condition, is the first pullback on the 5-minute time frame after the 30-minute reverse to buy. So the complete inverse. This was an absolute Picasso. And here's another bull flag here, which was the bear flag. S&Ps on that pattern dropped nearly from 2 o'clock. I think they dropped from 55, I believe, down to 37. This is the other bear flag right here, 54 and a half. And look what they did. Boom. They dropped 20. They dropped 20 on the S&P. So really great patterns there on the index futures using the multiple time frames. It's really important how you use the individual multiple time frames. Last one, I'm going to show you the IWMs. Again, this is all constantly repetition and visualization. The 30 reverses to sell. Let's switch this to the 15, right? And you can see the MACDs are negative. And what do you look to do? You short the first bounce on the 15-minute time frame at 12:30. This was actually a little faster than the other ones that set up later on. The Russell 220.05, and you can see the drop down about $1.30. So these patterns repeat themselves every single day. And one of the most important things that people need to focus on, okay, is a true understanding of the market in such a way that you're able to see the market and understand based upon the methodology I created. Last one, but not least, Avago, the 30-15 reverse to sell. So again, you'll hear me say the same things over and over again. 85% chance that the highs are in. The 30 reverses to sell. You short the first bounce on the 15. That happened right around 12 o'clock. Again, times between 12 and 2. This happened here, 305.96. And you can see the drop here down to 301. It dropped about $4. 1, 2, 3, 4, 5. Within 6 bars, 7 bars, Avago dropped about 4. And then you can just take smaller time frames for more shorts. But again, what's really important is to understand the methodology and then the sequences of what time frames are going to be in play. The 5, then the 15, and the 5-minute, then the 5 and the 15 and the 30 and the 30 and the 60-minute time frame. It goes in sequence. All right. When I get back, I will tell you what I expect for tomorrow. Okay, so for tomorrow, I want to play out the 60-minute time frames, which are still bullish here. Okay, right here, and you see that they're turning up here. Beautiful little bull flag. I think there's still more room to go to the upside. But with that being said, you have negative MACDs on the 30-minute time frames here. Okay, really very powerful. You have negative MACDs here on the 30-minute time frames. You can see it here. If you do get an overbought condition, or even if the algorithm is reversed to buy 633.95, You're talking 14 points on the S&P, so you're probably talking you'll get a buy reversal of 63.85. Remember, we're going back and forth here, back and forth here, back and forth here. Again, I really do believe that within the next few months, that gap of 6,000 will get filled. Will the 5,700 gap get filled? It could. I would love to see that happen. Markets won't like that. People won't like that, but I would love to see those gaps get filled, because right now we have about 3 to 5 gaps all the way down to 5,200. I don't think those are going to get filled right away unless something happens. But for tomorrow, I want to see if we get any push up here. Okay. Now, it looks like the Qs are going to reverse to buy on the 15-minute time frame tomorrow on the opening right here. You can see here the Qs look like they're going to get a buy reversal, and that'll correlate with the 60. If that happens, today's lows probably should hold, especially on a Friday. Okay. And so with that, I'm probably expecting the markets to push up. Look to get an overbought condition into the 30-minute negative MACDs. Look to short them, okay, and to see if the 30s reverse to buy. If that happens, then we'll look for pullbacks on the 15-minute time frame. But the first, I'll be looking to short them, look for a pullback, cover, and then look to go long. Again, we're in this tight little range here on the index futures. So S&P's dropped on last Friday down to the 6250, 6260 range. We're down 200 off the highs. We're right now in the middle, so we'll see where it goes. But tomorrow, if we do trade upward, I'm looking to short the overbought into the negative MACDs, and then I will look for any pullbacks if the algorithms reverse to buy on the 15 and on the 30s. We'll look to see how that plays out. All right. When I get back, I want to talk to you about the importance of using the underlying ETFs during the live trading sessions. It's really important. My research has shown that when you're trading the index futures or Bitcoin for that matter, okay, what you want to be able to do is look at the underlying ETFs. I would never be able to see the patterns I saw today, or any day for that matter, if I'm not using the underlying ETF. So today, when the SPY reversed to sell on the 30-minute time frame, it correlated with its 15. I knew to take the short on the first bounce on the 5-minute. When I say bounce, to push up, then the drop of about 20. And then if you look here, I want to show you the IBIT. So Bitcoin today was rather weak all morning. It was trading around the 115,000, 114,000 and change. But not once did the IBTs go negative, the underlying ETF for Bitcoin. So Bitcoin basically was still very bullish here all day on the 15, the 30, and look at the 60. So basically, the continuous contract, and look at this here, even you can see the yellow dots, which is the price, never got oversold, never got to a point that it looked like it was going to reverse to sell. So what did Bitcoin do? Bitcoin traded up over 2,500 points. That's correct, 2,500 points, all because the underlying ETFs were something to read based upon my algorithm to be able to detect that there was significant buying on that index, even using the underlying ETF. That gave me the confidence. If you want to trade Bitcoin during a U.S. session, you need to look at the underlying ETF, the IBIT. If you want to trade the spiders, S&P futures, it's the SPY. If you want to trade the NASDAQ futures, it's the QQQs. If you want to trade the Dow futures, it's the DIA. If you want to trade the RTY, it's the IWM. If you want to trade oil, look at the USOs. If you want to look at gold, well, it's the GLDs like I showed you. And let me show you, I'll show you here today. If you look at the USOs here, okay, the USOs are negative all day here. Today is the 7th. That was from yesterday. We're negative on the 30. We're negative on the 60, right? We're negative on the 15 right here. Every rally today, here is the first bounce here at 9:45. You look to take the short in oil. Here's the second bounce on the 15. You look to take the short in oil. So basically, and then if you look at oil here, you can see oil, beautiful short pattern. This is what's called a double red short. which means that when oil reversed to sell on the 5-minute time frame, it correlated with the 15, 30, and 60, not just on the oil futures markets, but also on the underlying ETFs, okay, the 15, 30, and 60-minute time frame. So it's important to use underlying ETFs when you're trading the market, especially the index futures. That's my message for tonight. Thank you for joining me here tonight on The Bull, the Bear, and the Ugly. Please hit the subscribe button. Please leave a comment. If you like to join my community of traders from all around the world, please join me at sktrading.live. Also, it is important, if you'd like to follow me on social media, follow me on official Stephen Kalayjian on X, Instagram, and TikTok. Also, if you'd like to reach out to me, my cell phone number is 914-500-7484. Remember, next Tuesday, August 12th, I believe it's August 12th, at 8 o'clock, I will be hosting a live Tokyo live trading session, so please be on the lookout for that. With that being said, God bless you. Have a wonderful, wonderful night. And I want to say God bless the United States of America. Be well, everybody.
Thanks for tuning in to the Bull, the Bear, and the Ugly podcast, your no-nonsense guide to the markets. If you enjoyed today's episode, be sure to subscribe at sktrading.live. We'd love for you to rate, review, and join our community for more real talk and market insights. Until next time, keep trading and stay sharp.